So 2017 was the year of higher milk prices, higher costs for Fonterra. What's your read on the year?
So hello and happy to be in the studio, Yvonne and Kathleen. You're right, it has been quite an extraordinary year because here at home we had a couple of weather events going into our peak of milk. Yeah, so we could collect less volume. We would have loved to have more volume. At the same time, prices went up by 57% around the world, so that is higher input cost. The non-milk price products, as we call it, versus the milk price product, gave us another 200 million tag to deal with. So on the other side, in terms of efficiency, operating expenses, we have improved a lot. So we're actually quite pleased with the result, and farmers are very pleased with the result because the payout to farmers is significantly higher, and we were able to stick to the 40 cents of dividend, which we did last year, and we are doing this year again, and we're having a strong return on capital. We always focus on what's the yield on a share for our shareholders and what's our return on capital, and both have been extremely strong on the back of an increase of milk price, which we have not seen for a long time.
So can this continue, this rally in milk prices that we have seen? I mean, for your output globally, I mean, we've seen New Zealand milk collection actually fall in August, and there were signs that wet weather would actually crimp production in September as well. Would you expect that to actually boost the global dairy trade price?
I do think that the prices will remain to be strong, and I also do expect that prices will creep up more than where we are now. But do we see this massive increase of almost 60% of last year? Definitely not. Because if you would see big increases again, then you see demand falling, and then the prices level out again. So I don't expect it. I do expect prices to strengthen a little bit till Christmas, and then you will see supply around the world coming on. So we are in a much more balanced world right now than last year. Yeah, so last year was a huge challenge, and this year is going to be, we can much more focus on ourselves, on strategy, and drive our business rather than this huge uplift in milk prices which we saw last year.
Talking about some of your investments too, Theo, especially in China and Beingmate, back in the black right now for you guys, but certainly it's come with quite a bit of cost, quite a risky bet, I guess, for you guys. Are you happy to retain the stake?
Yeah, we are happy to retain the stake because let me quickly say our China strategy is so much bigger than the investment in Beingmate. So we have a massive ingredient business and value-add ingredient business into China. We have a big footprint in food service. We have our consumer brands, but we also have what we call advanced nutrition, in aging population and in infant formula. And in infant formula, we have the partnership with Beingmate. It's part of our greater China strategy, so it's extremely important for us to keep that footprint together. And when we look at the partnership with Beingmate, yes, it has been tough times in infant nutrition because of the whole new registration and regulation in China. But it is we have moved through that phase pretty smoothly. We have brands and recipes registered right now with our partners. So actually, I'm much more positive about the year to come. Yeah, because we are registered, this is a key partnership, and we're going for market share.